Hello everyone. In this video, we're gonna see in version 18 what happened when we return a product with landed cost. So let's talk about the issue and the solution. Let's start with the conclusion. Odoo has an automated solution, and let's see how it works. So what's the background? So if we're returning a product that has already a landed cost associated with it, normally the landed cost value will remain in the product valuation because it will never clear as $0, right? Because you buy the product, you pay for the shipping, and in the future, if you would return the product back to the vendor, the shipping costs become a sunk cost. It's never gonna clear out. So, but Odoo has a solution because when the user return the product with the landed cost, Odoo will automatically detect that where there's already an landed cost associated. Hence, Odoo will create another journal entry for landed costs to reduce the stock value and book into the landed cost for expense account. So in this case, when the user return the product, the original shipping cost to deliver the product becomes a sunk cost. Hence, Odoo book it into an expense account. And these only work for Anglo-Saxon because if you were in continental accounting, most of your product receipt and vendor bill are already booked into expense account. Anglo-Saxon, on the other hand, book the product into a stock account. So it doesn't go into expense account right away until you sell it. But for a sunk cost of landed cost, you don't have an actual product to sell. So these stock, if it doesn't go to expense account, it will never clear out. But Odoo has a solution for that, which Odoo will automatically book into expense, which is great. A little prerequisite here that we're focusing on the product into the category of average costing and automated valuation. In this testing, the landed cost vendor for the shipping is not the same vendor as the one we buy the product from or the vendor who sell us the product. So let's start with the workflow. I want to show you a bit of setting first. So in terms of accounting settings, let's take a look at Anglo-Saxon. If it's checked. It's checked. So it's an Anglo-Saxon. Let's create a product. And it's already created, but I just want to show you how to look like. So let's go to a product, these PLC. So this is a landed cost product, which is goods tracked by quantity. And the cost is $0. It's in average cost, average automated settings. Average and automated, all the accounts are associated. And there's another product called shipping. It's a service product. In the average automated product category, the same as the previous product. In the purchase tab, we have is a landed cost split by equal. Now let's take a look at the workflow. So our workflow is we're going to validate a purchase order of these. Quantity 1 costs $100, and then we're going to create a bill. Later on, we're going to create a landed cost, which is a shipping to ship these products from the port to our warehouse. And we pay $20 for that. And then we will see that these product now, the PLC has a quantity valuation become 120, which is include the valuation. Okay, so let's start from here. So purchase a vendor, we're gonna buy PLC and we're gonna buy for $100. Confirm, receive, and validate. And so this is in number 8. Now we create a bill for it. So we pay the vendor. This is vendor A. We're going to pay them $100 to buy this particular product. Now, in order to have the product from the port delivered to our warehouse, we pay another vendor called vendor B directly just to accounting vendor bill. We pay this guy the shipping. It is a product, but not a physical product. It's just a product as a service type of product. And then it's going to book into a stock interim account, not expense account directly. And we pay for $20. And then we confirm. We cannot confirm because of the bill date. Okay. And then we confirmed it, and then we're going to create a landed cost. The transfer we're going to associate it is in number 8, the one we saw earlier. These would associate with PLC product, so validate. Once we do that, you will see that, first of all, in the inventory valuation report, we want to see the product of PLC. Right now, you will see my PLC, the total value is increasing from 100 to 120 because the shipping that we pay is also our cost, which is increasing our value until we sell it. Now, what happens if you don't sell it, but you return the product? You are going to return only $100, but what about the $20? Here, we want to see that Odoo has a solution. So the process will be going back to the purchase order. We're going to return this product, going to the receipt and click on return. Because there's no lot or serial number related, we can just click on return all, which is quantity 1. Validate. This means it's complete. When you do that, normally what you would do is on the accounting side, you will either create a credit note from the vendor or create a refund from the vendor who pays you. But you need a credit note as a return anyway. So let's start with this. Okay, reverse. Since our original bill doesn't have the payment involved, these credit note can directly reconcile with our bill. So it means that we do not owe vendor anything because we properly return the product. Now, by doing so, what happened in Odoo is if you go to inventory, you will realize that the product return become 120, but then you will be surprised because why not just $100? Because let's take a look. These 120 is in total booked into stock interim receive account. But if you take a look at just pure accounting, reporting and balance sheet, you will see that the received account, well, the 660 is a balance carryover from the other workflow, not this one. So in terms of these particular workflow, we do not have any balance. And how do we know that? Because if you take a look at these 4 steps, so from here to here. So you will see that 100, 120, 120, and 20. So let's take a look at what happened to, so 120 and 120 offset to 0. The thing is, because the vendor bill you pay for the landed cost or shipping, you are not going to return it because it's a sunk cost. Now, in terms of that sunk cost, Odoo book into this $20 to the cost of goods sold account, which means that these 120 against these $20 is $100 against with this. And then these $20 is a sunk cost, but Odoo take care of it in terms of booking to a stock interim receive account. Okay. So in reality, Odoo actually returned it for $100 and another $20 just book into an expense account. But your account here still remain balanced. Okay. And the rest of the imbalance come from here, which is the 680. All right. Thank you.